Good afternoon. Good afternoon. We'll start with the seminar. Good afternoon, Excellencies, ladies and gentlemen. Welcome to the ACI World Bank special event. And then the event, is, of course, is ASEAN Ready for Business, Insights from the World Bank Business Ready Report. So my name is Paul Cheung. I'm a director of Asian Competitiveness Institute. I'm very happy to welcome you here on behalf of the Dean. The Dean later on will speak, will welcome you himself personally. So 2025 is going to be a very interesting year. Barely 1 month into the year, trade and artificial intelligence have already taken center stage in global policy discussion. Fresh US tariffs and AI innovation like DeepSeek reshaping the economic landscape. And these geo-economic dynamics present clear risks, but they also present opportunities, especially for ASEAN. Between 2017 and 2023, ASEAN trade in goods surged by almost 40%. Both China and the US increased their share of the ASEAN trade by about 3 percentage points during this period, underscoring the role of ASEAN as a connector economy between China and the West. The region now stands as China's largest trading partner. Foreign direct investment in ASEAN has also been increasingly at the same margin, rising by nearly 50% over the same period. High-tech industries are drawing significant investments. Last October, Oracle announced US $6.5 billion investments in AI and cloud computing in Malaysia. And in December, NVIDIA established an AI research and data center in Vietnam. Chinese investment has also evolved, shifting the focus from low-tech to high-tech in sectors such as semiconductors and electric vehicles in Malaysia, Thailand, and Vietnam. So with all this, it's not surprising that economies such as Cambodia, Indonesia, Philippines, Vietnam has recorded GDP growth of 5% or more, and contributing to a combined ASEAN GDP of over US 3.8 trillion. So this makes ASEAN the 5th largest economy in the world. And we are nearly half of its population under the age of 30. Many countries in ASEAN are poised to harness this demographic dividend from a dynamic and youthful workforce. So intra-ASEAN trade has also grew by 30% during the 2017 to 2023, highlighting the region's expanding economic interconnectivity. So will ASEAN capitalize on the current boom in technological advancement in the region, as well as its connector economy position to drive growth in the coming years? Can the region serve as a gateway for business to achieve robust growth? Is the region well equipped with the infrastructure and sound regulatory framework to seize the opportunity? So today we are grateful to have the World Bank here to launch their special report, Business Ready, and to address the question, is ASEAN business ready? The report will offer an incisive reality check on the region's preparedness to support business growth and improve our performance as a connector economy. It's my belief that the future looks good for ASEAN. Despite the turbulence in world trade and politics, we should try to do better by taking stock of the areas that we need to improve further. So now, I will now invite our Dean, Professor Danny Kraft, to give his opening remarks. The Dean, please.
Dr. Norman Loiza, Director, Global Indicators Group, World Bank, Professor Paul Cheung, Director, ACI and Special Advisor to the School, Excellencies, ladies and gentlemen and friends, Paul has been kind enough to invite me to give some opening remarks for this event. When Paul and I discussed Well, Jay, when I say we discussed, he told me what I'm going to say. When Paul and I discussed what I might say at this meeting, he said, as you've seen, he's given us a good optimistic view of the role of ASEAN as a connector in this world that we are now navigating. In a few minutes, Norman and the panel will discuss how we continue to do this, how ASEAN continues to be business ready. I've read the report. It's a wonderful discussion of the different characteristics of different member states in ASEAN and how we are ready or the ways in which we are not ready and can do better. I now sit between the two of these wonderful presenters, and so I thought what Paul and I discussed I might do is maybe inject a bit of a burning platform kind of bad news element to the discussion. What might go wrong? Why might it be that we might not be as successful as we think we can be and as we hope we will be? So I would like to make 3 points. The first of these is that economic growth and the role of economic ideas have propelled global economic history for pretty much all of recorded human civilization. We're now at the edge of an era where for the last 7 decades, we have so successfully leveraged our models of economics and growth. Those models of economics and growth, on the one hand, relied on the accumulation of capital, the upskilling of labor, and the improvement of technology. Those models of economic growth have in mind the view that there's a private sector whose development builds on a platform that's provided as a global public good by governments, ministries, agencies, and organizations like the World Bank, the IMF, and others. The ingredients of this platform include, as you will see in the Business Ready report, regulatory frameworks, public services, ways to think about operational efficiency. And these 3 planks are critical ingredients on such a public platform that helps economies become better and better at what they do. The World Bank Business Ready report will be a deep dive that allows us to think of the balance, the setting, and the environment that's required for successful, inclusive, sustainable development. In this first point, we're on a good journey. For my second point, let me indicate or flag a part of the story that's not always discussed as much as it should be. And this second point is that the internal development of an economy is crucially important. The capital, the labor, the technology, the business readiness, regulatory framework, all of these are internal features of the economy. But my second point is this: the external environment also matters. And the external environment is not something we typically think about. Even in Singapore, where we trade 300% of GDP. Every day, 3 Sing dollars of value in goods and services flows in and out of the nation for every dollar that is generated within the nation. And this Singapore experience is not unique to Singapore. If you look at a map of the world, not geographically, but in terms of successful economic performance, measured by, say, per capita income, look at the richest countries in the world. That's different from the biggest, most powerful countries in the world. The 9 richest countries in the world, if you look at 8 of them, their average population is less than 5 million people. The great bulk of the successful economies in the world are actually smaller than Singapore, or about the same size, because it's only about the same population as Singapore. The one outlier to that is, of course, as you know, the United States. Small states, small countries are hugely successful. And the thrust of my second point is that there is a limit to how much small states can push their success. Because small states are such that they will always produce too much of what our farms and industries can, and never enough of what our people need. This imperative is one that says that all small states succeed when they live in a stable international environment with clear operating rules that allow them to exchange with the rest of the world. Again, my second point, internal developments matter, but external ones do as well, especially for those countries that have been successful, and especially for small states like ours, like everything you see across ASEAN. Even states with big populations are small states economically. A stable international environment is the key basis for trade and foreign investment. And that gets me to my third point. Why am I the interloper here with potential bad news? It is no surprise to everyone who has simply opened a newspaper any day of the last 2 weeks that you will know our international system is being severely disrupted. Multilateralism, which for the last century has provided level playing field and clear rules by which nations engage in business with one another, is on the rocks. It is being challenged every day. For those of us for whom economic development continues to be important, we need to pay attention to our internal developments, to the accumulation of capital, upskilling of our labor, public goods, all the things that we can effect, that the World Bank in its Business Ready report will help us effect. But we also need to pay attention to what's going on outside. Let me end by saying there are those in Asia who say that what's happening in the United States now is simply a return to transactionalism and realism. And we're okay with that, because in Asia, we know how to deal with transactions, and we have had to deal with hard truths on realism. All that is certainly true. But transactionalism is successful when we can predict what others do. Transactionalism, even without a level playing field, requires an understanding of basic processes and at least a semi-rational calculation of gains and losses. And while we in Asia might feel that many of the things going on elsewhere in the world are other people's concerns, we also believe that national sovereignty and territorial integrity are key principles that have allowed us to survive and prosper. We need order based on principles, not just realist might makes right. 80% of humanity lives outside the United States and China, and survival for all of us depends on our moving ever more on a path of stable and navigable international order. The challenge that's ahead for us, all of us here who are interested in economic development, in helping businesses do better, even at a very local level, cannot be divorced from what happens internationally. More than ever, we need the kind of help that institutions like the bank in its Business Ready report can provide us for thinking about what happens internally. And more than ever, we need thinkers that can help us navigate this external environment that's become choppier, more fragmented, and more trouble than any time in the last 7 decades of global history. Let me really finish by quoting a great American president. Bill Clinton, 20 years ago, as he looked around the world and he saw the troubles that the world faced, he said the right question is not for us to approve or disapprove. The right question is what is the smartest thing for us to do now? And it's trying to think through those smartest things that we are gathered here this afternoon. Thank you all for being here and have a good session.
Thank you, Dean, for the very insightful opening remarks. You can always learn something from Danny's presentations. Now I learned this word, transactionalism. Our next speaker is our main event, Dr. Norman Noasa. Norman is the director of the Global Indicators Group at the World Bank. And currently, he's a very important person. He supervises all the major documents, major reports of the World Bank. He is responsible for the women business and the law, enterprise surveys, and the global and subnational business ready report. So he was a lead economist in the development research branch, and he was responsible for the 2014 risk and opportunity managing risk for development. It's one of the major World Bank's World Development Report series. He was based in Malaysia for a few years and was the head of the research hub at the Malaysia's regional office. Norman, we're happy to have you here. Yeah.
Good afternoon, everyone. Thank you very much, Paul. Thank you, Danny, for that brilliant introduction, which actually sets the stage very well for what I am going to present. So I am here to present the new corporate flagship of the World Bank, Business Ready. Business Ready replaces and improves upon the very famous Doing Business. And this is a report that is in its infancy, but it's growing fast. So let me tell you the main motivation and how it is structured and the results of the first report. Danny said it in his very first point, that no country has been able to develop without sustained economic growth. I'm sure you recognize these two photos. With economic growth comes transformation and opportunities for job creation and for investment. The need for growth is very high around the world. In fact, in the latest World Development Report, called the Middle Income Trap, we learned that 75% of the population live in countries that are in this middle income stage, unable to go one step further and become advanced. Through this report, we also learned one interesting number. This is how much they should be growing in order to advance to that next stage. And that number is 5% of GDP per capita for a sustained period of time. So let's keep that number in mind. The ASEAN average in the last 10 years has been 2.9%. True that in the last 2 years we have seen stronger growth, but if we look at the last 10 years, there is a significant difference between what ASEAN has achieved and what it needs to achieve in order for many of these economies to actually become advanced. I am going to present results about 5 of the 5 economies in ASEAN, 4 of which are in that middle income trap. The exception is Singapore. What's the key to obtain sustained economic growth? The key is a vibrant, dynamic private sector. And to be frank, the private sector around the world is already an economic giant. It employs 90% of workers. About 3/4 of output and investment are due to the private sector, and it contributes massively to government revenues. Yet, this private sector in many countries is not very active. It is, in a sense, like a sleepy giant. So how do we wake up that giant? The way to do it, we believe, is by actually providing a business environment that is favorable to their growth. What does that mean exactly? It's lowering the barriers that impede growth and actually putting the enablers, the public services that can complement the work of the private sector. So in this way, an economy gets transformed from being an economy dispersed, rudimentary, slow, to an economy that is actually diverse, sophisticated, and rich. Then that in turn begs the question, what makes for an enabling business environment? And this is exactly the answer the question that we are trying to answer through this report. So business ready, or using the nickname Be Ready, which is also a call for action, Be Ready is the new corporate flagship of the World Bank. And in 2024, we launched the first report. After 3 years of preparation, we were able to launch the first set of data. And we are going to keep doing this on an annual basis. But we had to start with just a sample of economies. We chose 50 economies. And that includes, actually, the 10% of those economies are in ASEAN. One of them, of course, is Singapore. This year, we will have a second edition of the report that will include more than 100 economies. Interestingly, we are going to include China and also the United States. So it will be very interesting for everyone, I believe, to see the comparison of these two giants. In 2026, we will have about 180 economies. That's where we are planning to have the completion of the rollout phase of this report. From that moment onwards, we will have about 180, 190 economies around the world every single year. That's the goal. Okay, so let me tell you now about the structure of this report. We have structured the report so that it follows the life cycle of the firm by having 10 topics. These 10 topics are business entry, business location, utility services, which actually really means water, electricity, and internet services, labor, financial services, international trade, taxation, dispute resolution, market competition, and business insolvency. So what you can see here is really sort of a metaphor of what we want to convey. It's a life cycle of a firm calling for renewal, calling for a system where the least productive firms actually exit the economy, and where the most productive firms stay, and where the new firms that actually have the better ideas are able to enter and grow and compete. So this is the idea that we have behind this life cycle. If you will, it's the Schumpeterian approach of competition and also of creative destruction. For each of these 10 topics, we have studied 3 pillars. These pillars are the regulatory framework, public services, and operational efficiency. One way of thinking about these pillars is that we go from de jure to de facto, from what is on the books to what happens in practice. So, regulatory framework is the set of rules, regulations that a firm must comply with in the course of its life cycle. Public services are the facilities that the government can provide to help firms comply with regulations. For instance, digitalization. But it's also the institutions and the infrastructure that enable business activities. And operational efficiency is a way of measuring the compliance, the ease of compliance with the regulatory framework and the effectiveness of these public services. Let me give you one example to make things more concrete. And this example is taken from the topic of business location. Remember, it's only an example. Under regulatory framework, we assess whether there are restrictions on the ability of foreign companies to lease or own a company. So this is just about the law. A law applied to these foreign companies. Public services. Well, I told you about digitalization. Here we measure whether there are digital platforms to register a property transfer. And for operational efficiency, we measure the time to obtain a construction permit. Okay, so there's another example here that you can just see. It's related to the area of dispute resolution. But I believe that you understand now what I mean by each of these 3 pillars. And we have these 3 for every single topic that we cover. Data sources. We rely on 2 data sources. On the contribution of experts who are very familiar with the business environment of every economy. We actually have, for every economy that we assess, between 60 and 80 experts. They may be lawyers, architects, freighters, they could be specialists in construction or especially in litigation. We have, in fact, 21 questionnaires that we administer to these experts. And we also ask firms, and we do it through by interviewing and completing a representative sample of firms in the economy. So we get data from experts, we get data directly from firms, which is actually something that we didn't do in doing business. Doing business didn't have the voice of the firms directly. Now we actually can get de facto information from those people, from the firms that are actually confronting this business environment on a day-to-day basis. Expert questionnaires, this data we are gathering every single year. Enterprise surveys, we will gather on a 3-year cycle. Now you may be wondering, why don't we do it every year? The reason is very simple. It is too expensive. It is too expensive to run a survey that is of this nature that is nationally representative, that is also sector representative, by company size representative, and even by regions when we have large countries. So running one of these enterprise surveys is a major undertaking. Doing this for 50, 60 economies every year is massive. 180 would be impossible. So now I think you may understand why we are rolling out this gradually, because we have to start with some economies for which we can have both the data coming from experts and also the data coming from the firms themselves. So how will this work next year, or that is in 2025? We will add this about 50 plus economies, so that in total we will have 100 plus, with new enterprise survey data for those that are coming in addition. And for those that are already in 2024, we will use the enterprise survey data that we already collected in 2024. That's the way we'll do it. So just remember, expert questionnaires on an annual basis, enterprise surveys on a 3-year cycle. Now let me tell you about the results. The first thing that I want to emphasize is how comprehensive this assessment is. We actually give you, for every economy, 1,200 indicators. This is a massive amount of information, and a massive amount of information that can actually serve to guide reform in very specific terms, because we tell you not only where we believe economies should go, that is the growth rate that they should achieve, but also we tell you what kind of steps, in very specific terms, they should take in each of the 10 topics of, that are the structure of this project. But I cannot present to you 1,200 indicators, obviously. That's too much for every economy. We will probably spend several months talking about them. So the report will be several thousand pages long. Now, we need to summarize this information. And the way we summarize it is by using some scores. Okay, so we have 10 scores, one for each pillar, and we also have 10 scores corresponding to the topics. So we have different angles that we measure through these scores. They go from 0 to 100, and what that means is that we can consider the score as the fraction or the percentage of business readiness. So if I tell you that Singapore gets a score of 75 in the area of financial services, for instance, I am telling you that Singapore is 75% business ready regarding financial services. So this is the way to interpret these scores. Now, in this collection of 50 economies that we assessed in 2024, you might ask which countries performed well, and maybe it's not surprising to you that wealthier countries tend to be more business ready. And I want to underscore 2 countries that do exceptionally well. One of them is Estonia, and the other is Singapore. Estonia is already a leader in terms of digitalization. They have taken this digitalization to an extreme in order to provide the best services to citizens and also to businesses. Singapore, well, I don't have to tell you about Singapore. It is a country that is immensely effective because of its pragmatism and because of this obsession for efficiency. What is maybe less surprising, at least to me, it was actually surprising, is that some economies that are poor are able to actually develop a favorable business environment. So you don't have to be rich to develop this environment that is positive for businesses. And I can give you a few examples. Rwanda is an example in sub-Saharan Africa of a country that has been able to develop a strong business environment. Indeed, in our assessment, in 6 out of the 10 topics, Rwanda performs in the top 20%. And it's not surprising then that Rwanda has been able to grow in the last 10 years so that it has doubled the size of its economy. And it has also doubled the size of foreign direct investment coming into the economy. The second country that I will underscore is Georgia. Georgia does surprisingly well, particularly in comparison to the neighbors. It is in the top 20% in 7 out of the 10 topics. And the growth rate of Georgia in per capita terms has been 5% on average in the last 10 years. These are interesting examples that I want to underscore. Now, if we look at different regions, we find also some interesting cases. Colombia is the country that performs the best in South America, but not evenly. So Colombia actually performs well in the pillars 1 and 2 on the regulatory framework and public services, but they don't perform well in operational efficiency. That is, in how efficiently things are run and done. And maybe if there are any Latin Americans here, I am Latin American, well, it's not maybe a surprise that all the Latin American countries that we have assessed have have the same issue. They perform well on laws and even the design of public services, but not on efficiency. On the other hand, the other extreme, we have Vietnam, that doesn't have a very good regulatory framework, but it does things very efficiently. It performs efficiently, and I believe it has to do with the quality and commitment of the bureaucracy. All right, so we actually, when we examine all these economies, we find certain patterns, and let me underscore one of them, and it's what we call the public services gap. That is the difference between the scores in the regulatory framework and public services. What we find is that countries tend to perform better in the regulatory framework than in the design of public services. And that this gap is 3 times larger for low-income economies than for high-income economies. Now let me zoom in the results for ASEAN. I will start with scores, and then I will tell you some indicators. Okay, that's the way I will proceed. So let me start with scores regarding 2 pillars. These are the numbers on average for ASEAN. You can see that for regulatory framework, the score is higher than for public services. If we want to just summarize for the whole of ASEAN, we could say that on average, this is 2/3 business ready. With interesting differences, that on regulations, they are much better than in the design of public services, and in terms of operational efficiency, they are at a par with regulatory framework. This is Singapore. In Singapore, this public services gap does not exist, as you can see. And where the difference with respect to the rest of ASEAN is most remarkable is actually in the 3rd pillar on operational efficiency. And this is the best in business ready. The best in business ready, well, you guessed it probably already, that the best in these 50 economies on operational efficiency is Singapore. Well, that's why the 2 bars are the same. But there are other economies that actually do a little better than Singapore on the regulatory framework and on public services, a little better. Now, the 5 ASEAN economies perform differently. Here you can see this is a sort of a traffic light system. Green means very good, red means bad, and you have some things in between. So, of course, in the case of Singapore, we have excellent performance on pillars 2 and 3, and decent performance on regulatory framework. Maybe the other extreme is Cambodia, where actually in each of the 3 pillars, they perform in the bottom 40%. The other countries have some nuances, which actually make the study of them very interesting. We can do the same for topics. You know, and these are, well, this is a different type of graph that we have 10 topics, so it's easier to show with this kind of a graph. And what I noticed, what is more remarkable to me, is that it is in market competition where the ASEAN average is relatively small, relative to the rest, relative to the other topics. And actually, it tends to be like this in Singapore as well, and even for the best in Be Ready. So the best seem to be doing well in other respects, but market competition for ASEAN, for Singapore, and even for the best in the world is still a challenge. So please remember that point. Market competition seems to be a challenge for many economies. So providing a level playing field, providing the right environment for innovation, providing good laws and good practices for procurement with governments, that's what we include under market competition, that seems to be lacking. Okay, so here, there are too many numbers for me to show, but I can share the PDF of this presentation with you so that you can examine this at your leisure. But I will just underscore 2 things, just 2. One is that I am surprised that under business entry, we have some reds, that is not very good performance. And you know why I am surprised? Because business entry is the very first thing that needs to be improved in order for a business to start its operations. And it has been there, this topic, under doing business with a different name, but I think it was registering a company. But it has been there, yet progress has been elusive in this area. And on the other side of the spectrum, we have labor. In this region, in the ASEAN region, labor actually performs, or the countries perform well in the area of labor. That is, they have been able to get this balance of workers' protection on the one hand and labor market flexibility on the other hand. A bit surprising is that Singapore, the star of the show, doesn't do so well in labor. Whereas all the rest have greens, Singapore has there a yellow, which means that it's around the median. Okay, but clearly we have a difference between Singapore and the rest of ASEAN. These are all the topics where the country achieves the top 20%. Singapore is in the top 20% in 8 out of the 10 topics. The other economies, Vietnam has 2, and the other 3 have 1 each. Now, I have presented to you a scores, right? Sometimes that's okay to understand in a summarized way, business readiness. But let me tell you, I told you that there were 1,200 indicators, right? You remember that? So let me give you some examples. And I will give you just one example per country of the 10 topics. 10 topics, but I will choose just one country and I'll give you one example. So this is just to whet your appetite so that you can actually go and see this study with maybe more interest. Okay, so let's start. For business entry, I chose Cambodia. And the number or the indicator that I will present is this, that it takes more than 2 months to register a new domestic company in Cambodia. In the most efficient economies, it takes only 3 days. I told you business entry was an issue for ASEAN economies, except Singapore. And actually, this number, 2 months or more than 2 months, is something that gets repeated for other ASEAN economies. Business location. This is about transferring property, right, or building, construction, getting a building permit, etc. In the Philippines, it takes companies 90 days, 3 months, to transfer a property. In the most efficient economies, it takes 1 day. The difference is enormous. Utility services, Cambodia, you will hear Cambodia a lot because this is the country that performs the least well, so I chose more indicators for Cambodia. Utility services, about 40% of companies in Cambodia suffer internet disruptions in a typical month, 40%. In the most efficient economies, that's only 2%. Labor in Singapore, this is the area where Singapore seems to be relatively weak. And how do we know this? Well, a number of indicators, but maybe the most telling is what firms actually think about the labor market. 24%, 1/4 of the firms in Singapore actually perceive labor regulations to be a major or very severe obstacle. In the most efficient economies, that percentage is less than 1%. Financial services, Indonesia. Only 30% of payments by firms to their suppliers are made electronically. So they're using checks a lot or cash. That's not very good practice. In the best performing economies, that payment to suppliers electronically is done 99% of the time. International trade. Indonesia, large economy, where actually trade should be very strong, but it costs 66% of imported goods value and 35% of an exported goods value to comply with all the import and export requirements. So this is like having a huge tariff imposed on yourself. In the most efficient economy, that cost is only 2%. You can see the difference. Vietnam has lots of small companies, right? Many of them informal. Maybe this is one of the answers why they remain informal. Because for formal firms, small companies cannot make use of simplified record-keeping methods, such as single-entry bookkeeping. Dispute resolution, I also chose Vietnam. It costs 39% of the claim value to settle a dispute through the courts. Actually, 39% is a huge loss. In the most efficient economies, the value is below 10%. Market competition, here the problem, in the case of the Philippines, seems to be that many of the prices are regulated. 22% of firms say, my price is regulated. In the most competitive economies, it is less than 4%. And finally, and this is business insolvency. Business insolvency in Cambodia, the surprising thing is that in the last 3 years, there has not been a single case of a completed insolvency. So it's either that this economy is wonderful and there are no cases of insolvency because firms are all prospering, or what is more realistic is that the economy doesn't have the ability to address bankruptcy and reorganization cases. All right. So in conclusion, the question that we have for the panel is ASEAN ready for business? The answer is partially yes. Partially yes. And the answer is also depends on the country. Singapore is ready for business. The rest have lots of room to improve. And you can see that by the scores that they are able to achieve, that is the business readiness of their environment, where the design of public services is lacking. I started this presentation by talking about growth, right, and how important growth is. Danny Kuan, of course, started his remarks also. That was the very first point, growth. Actually, this looks nice. It's GDP per capita for these 4 economies, not Singapore. 4 economies in ASEAN. Since 1990, we see increase. And this, the average growth is given in the table. As you can see, Vietnam is the economy that is growing the fastest, 5.1% on average, very respectable rate. They will very likely escape the middle income trap if they continue like this. Other countries, on the other extreme, the Philippines, only 2.4%, less than half of Vietnam. Well, let me tell you, other regions in the world will actually envy something like this. Because if you actually graph GDP per capita in many regions, you will see something flat or even declining, which is really worse. But in ASEAN, this is the situation. Now, that was the good news, that they are growing. The bad news is that they don't seem to be catching up with the leader. And the leader in this region is, of course, Singapore. The only one that seems to be doing that, achieving some catch-up, is Vietnam. In 1990, it was GDP per capita was less than 6% of Singapore. By 2023, it's above 10%. So again, the importance of growing at a sufficient rate. Let's keep that goal in mind. 5% of per capita GDP growth and how to achieve it. People, 75% of the world live in countries, again, where the economies are stuck in this middle income trap. How to get out of this middle income trap? This ladder is the business environment. And the key messages of this report, at least for ASEAN, is that ASEAN countries need to renew their ambition for economic growth. Actually, they have always had this ambition, but maybe it needs to be renewed once again. And the way to do it is by allowing the private sector to be that engine of high and sustained growth. That does not imply that governments should be just hands-off. Not at all. What that implies is that governments have a lot to do in providing high-quality regulations, providing well-designed public services, and ensuring that they are actually put into practice and not just left on paper. I hope this is interesting for you. I hope this is also interesting for policymakers and for academics that are going to receive lots of data to work with. Because we believe actually that if you have information, you can make better decisions. If you close your eyes to facts, you will learn through accidents. So we better use data to avoid these accidents and create a path for reform. Thank you very much.
Thank you, Norman, for that excellent presentation. It's really wonderful, and it's a lot of work there, to get the report out. And you can imagine they're going to 190 economies. So just helping Norman out, the report is actually available. Norman has brought quite a lot of copies from DC. So if you don't have a copy yet, it's available outside. On the way out, you can pick up a copy of the report. It's also online, of course, in the World Bank's knowledge base. So now we have invited 4 very distinguished panelists to come and share with us about the business environment in ASEAN, whether ASEAN is business ready. So I will now invite Dr. Sin to be the moderator of this, the panel, to come up and then introduce the panelists. Dr. Sin, please. Yeah.
Hi, good afternoon, everyone. My name is Xing, and I will be moderating today's panel discussion. We are honored to have 4 distinguished business and thought leaders with us today. To start, I will introduce each panelist and invite them to the podium one by one to share their views and experiences on whether ASEAN is business ready. So first, I would like to introduce Mr. Ping Kuan, Executive Director, the Center for the Future of Trade and Investment and the Singapore Business Federation, with a focus on advancing global trade and enhancing trade and investment capabilities for businesses. He brings 30 years of diverse experience in the private sector, having held leadership roles such as CEO, regional director, country managers at startups, as well as multinational corporations, including Nestle, Coca-Cola, Givaudan, and Auri Pacific. Ping Kuan, I invite you to the podium. Thank you very much.
Good afternoon, and thank you for the introduction, Dr. Sin. It kind of makes me feel like I'm quite old now, having so many years of working in the consumer business. I just wanted to make some comments regarding international trade. So I think Dr. Norman has made a lot of comprehensive results in terms of understanding what this is all about. And the ACI business report actually shows that the Singapore's international trade regulatory framework scores about 78%, and public service efficiency also quite low at 69%, right? And this is definitely below the global average. And these figures actually highlight key points of what the business are facing today. There is a lot of digital trade barriers, the need for an improved trade infrastructure, and the better coordinated border management to support seamless trade flows. So as global trade becomes more complex and unpredictable like what is happening today, we must adapt, innovate, and strengthen our business support systems to remain competitive. And I want to share with you a little bit of the survey that SBF has also done recently last year. And 49% of companies surveyed need assistance with regulatory challenges. And also 33% need support for digital transformation. So you can tell that it's very congruent in terms of what is happening today, that there is still a lot of areas that we can improve. So then how can we work together to overcome them? I just wanted to take a bit of time just to share some things that we are doing at SBF. Right? So at SBF, we have a full suite of advisory and also digital solutions to help business navigate these challenges. So for example, the FTA Advisory Services, okay, that is formed by the C40 team, which is the Center for the Future of Trade and Investment. Right, we currently have trade specialists providing 300 advisories per year to help business optimize FTA utilization and compliance. So in the coming months, we will be introducing a trade and investment competency framework, and this is aimed to train and certify trade specialists, right? And this will allow them to deepen their trade expertise within their organization. So you put the expertise into the organizations for them to be able to do this well. Secondly, the AI-powered FTA web portal. And this is an upcoming web portal, a digital platform that will provide automated support for all the FTA-related inquiries. And we have got more than 300,000 companies in Singapore. And this solution will scale up trade advisory services and provide faster, real-time, and efficient business support. And looking ahead, we even plan to do this and expand this digital solution to the ASEAN economies in the coming years. So I think by leveraging technology, expertise, regional partnership, SBF is committed to enhancing Singapore's trade ecosystem and also to strengthen ASEAN's position in global trade. Right, before I conclude, I just wanted to maybe leave a bit of thought to everybody. So what is happening today in terms of the geopolitics and all, right? Can business really truly be future ready for the challenges ahead? Do we know what are the challenges ahead? Can we be offensive or defensive about this situation? So the answer to this question will definitely define the business readiness, and the resilience of the future of trade and investment in Singapore and beyond. So thank you for your time, and I look forward to the panel discussion shortly.
Thank you, Kuan, for that insightful discussion. Next, I would like to introduce Mr. Jimmy Koh. Jimmy is the Managing Director and the Head of Network Partnership and Strategic Marketing for the Group Foreign Direct Investment Advisory at UOB, focusing on identifying and cultivating partnership across ASEAN countries. Previously, he held positions as Managing Director for Group Strategic Communications and Brand, Chief Commercialization Officer for the UOB Digital Group, as well as Managing Director for Sector Solutions, Investor Relations, and Macroeconomic Research. Jimmy, the floor is yours.
Okay, afternoon. I want to share a few observations based on the studies that the World Bank has done and what we are seeing on the ground. So three things. One, I want to share a little bit of what we see in the operating environment today. Then second is where a bank like UOB, the role that we play. We were established in 1935. And then the interesting thing about this unit that I'm part of, called Foreign Direct Investment, whereby we help corporates explore and look at opportunities and lend into this part of the world. First, the operating environment. We see all the headlines every day. In fact, we wake up, we wonder what the headlines are and how serious will some of these executive decisions be really over time be implemented. The tension between what you see in China and what you see in the West, this is unprecedented. In fact, we would say that the best of globalization is behind us. I think the best time of globalization was when the Berlin Wall fell in 1989, and since then, for the last 30 years, we actually have the best time in terms of globalization, and every country knows exactly which part of the value chain that we have. And one of the rise was the rise of China, when China entered WTO in 2001. Right, where they were the suppliers of global brands in US and Europe, able to facilitate that in a fantastic way. In fact, when I was in supply chain as well as digital bank, we look at even Alibaba. Alibaba became what it is because of China entered WTO in 2001, whereby it was created in 1995 and they came out with Taobao. It's able to help the Americans and the Europeans brand owners to find the suppliers in the big Chinese economy. And that was exactly what Alibaba was doing. And then along the way, what they did is that they did payments. Actually, they did payments because no banks were willing to help them, because payments, we don't make a lot of money. And then eventually, they created Cainiao, which is actually the whole logistic. And Alibaba basically works on that. And it was riding on the whole global supply chain, the globalization of the world. And that's behind us. The next 30 years, it will be a lot more fragmented. What we are seeing today is the beginning of much more. On average, my team and I meet with 2 to 3 delegations from China coming down into this part of the world. They may not Chinese company. They are just global companies whereby their OEM or their suppliers are based in China, and they needed to create a China plus one. And I think not only through a trade tension, but even through the COVID and the whole shutting down of the Chinese economy just tells you that anything can go wrong, right? And so they started to build that whole China Plus One. So they are coming down to Singapore as the first stop, and then before they move into any other parts of Southeast Asia, Batam, Bintan, including now, which is so much talk about, is the whole Singapore-Johor SEZ. And I think that will be something that will be significant over the next 5 years. In fact, we brought one of the OEM or the suppliers of iPhone in China, and during COVID, one of that line was being closed down, and they have to move that line to India. And that company now produces routers in Batam. And that company today hire about 8,000 people in Batam alone. So what we do is that we are not just creating jobs, we are creating livelihoods for a lot of these emerging markets as a result of this supply chain. And what you will see the next 30 years is that a lot of this manufacturing base will start to relocate into different parts of the world. And ASEAN will be one of the key beneficiaries of this. In fact, we go around the region, we tell all the government agencies the next 3 to 5 years will be the most critical period, because everyone is going out there to tell the world that come to my country, we have a good operating platform. Because anyone that lands into any of this country, they will be there. Once they are there for the next 3 years, you know they will be there for the next 3 to 5 years again, because things are being established. Otherwise, you have to wait for the next wave. And if you look at the numbers, since 2015, global FDI has fallen almost 35%, from about 2 trillion down to about 1.3 trillion in 2023. And ASEAN numbers have increased from 120 billion to 230 billion, increased almost 90% over the same period of time because of the whole changes in the whole global supply chain. And you know, interestingly, of that 230 billion, actually 160 billion lands in Singapore first. Not that eventually they will be in Singapore, but they use Singapore as a first stop before they move into other parts of Southeast Asia. So you see that Singapore is always positioned as the regional headquarters, the regional R&D centers, etc. And then they will put their manufacturing base across the region. And Johor is becoming an interesting part. This started in, Johor is not new, the collaboration with Singapore. 1989, we have the Sijori during Prime Minister Goh Chok Tong's time, and then in 2004, we have Iskandar. Today, we are having another space that I think will be materially different from the last time, purely because of the whole changes that we are seeing globally. And what we see right now, UOB incidentally was placed in a very unique position. We started, I used to run investor relations. Over the last 40 years, UOB have bought 5 banks in Singapore and 4 banks outside Singapore. And you know why we started buying banks outside Singapore, acquiring banks outside Singapore after the 1998 crisis? Because Singapore was just too small. You know, what is the home ownership like in Singapore? 95%. Then maybe slightly lower. We take a stone, we throw, we say we hit someone, already got a mortgage loan. We say we really need to move out. So we started with opportunity arises. The bank actually managed to acquire 2 licenses in Thailand, 1 in Indonesia. Malaysia is unique because of the historical legacy reasons. Between the 2 countries, we are the largest foreign bank. So today, more than 50% of UOB's revenue actually comes outside Singapore. And today, because of what we are seeing, we became the interesting part to link all these corporates coming down into the region through a Singapore platform. Were we very smart? No, we just think that this is our playground. We just need to develop this because Singapore was just too small. In fact, in the 1990s, when we started to go out in the region, internet wasn't as established. Our approach is we must be able to fly there, have our morning meetings, afternoon meeting, and fly back for dinner. Because if not, it's too far away. And you realize that most of the banks that get into trouble is because they are just too far away. Banking business is very different. In most of business, when the deal is done, the risk ends. In banking, when the deal is done, the risk just begins. because you have already extended your money out there. So, and that created a very interesting platform for us today. The banking world has changed because of what we saw in 2009 crisis, the retreating of foreign banks. The last 3 years, we managed to acquire a Citibank license for 4 countries again. So again, not because we were good, but because we leveraged on the global opportunities that was lying before us. Last, this unit I'm part of, what we do is that we connect companies into the region, exactly those things that we highlighted. What are the key challenges when corporates land into this part of the world? Culture, language, connecting to local partners. I think those will continue to be an issue. I recently met one Taiwanese company that moved their supply chain diversified from China. They love Vietnam. And then when they landed in Vietnam, they realized that language was such a big challenge, right? So that's where banks like us try to facilitate that kind, right? Culture is always an issue. And I think over time, we need to understand the mode in which we are operating across the region and understanding the diversity. Just give you one example. Sometimes we have meetings in the morning. They say, let's have 8 o'clock meeting. I say, guys, we don't have 8 o'clock meeting. You know why? Because in order for me to have 8 o'clock meeting, my colleagues in Indonesia will be 7 o'clock. And some of them need 1.5 hours to get from their home to the office in 1.5 hours. That means they have to leave at 5:30, right? And I think we need to be mindful as we start to operate across the region. Friday, 12 o'clock, we don't have meeting because our colleagues in Malaysia and Indonesia need to go for prayer. So I think being mindful of some of these things are the art of operating correctly and sharply across the region. And I think those issues will continue to be there. But interestingly, because of those issues, that's why I have some business to do, right? We are able to help to facilitate and marry up some of these things. And hopefully over time, we create a more seamless platform in the entire region. But ASEAN will be a very unique space. We will become the manufacturing base of the world again. Those of us who are not that young, you remember we used to have Philips at Toa Payoh Lorong 1. We used to have Panasonic and Technics in Bedok. They are no longer here because after 2001, China, they have gone out. And now some of these are coming back. They are not coming back with just small companies. The Hyundai of the world are here. I think we have elevated ourselves into a different platform. And here we will be the R&D center. Across the region will be where the manufacturing base together. And entire ASEAN will become a unique block into a world that is very divided. I think there's a role for us to play. Right. Thank you.
Thank you, Jimmy, for sharing your stories and insights. Now let's welcome Ms. Wee Hui Ting. So Ting brings over 30 years of experience in corporate leadership roles. She has notably served as the Regional Managing Director of GrabPay and as Visa's Country Manager for Singapore and Brunei. Ting holds several board positions, including Independent Director at AIG Asia Pacific Insurance, Maxis Berhad, and Bridgetown Third Holdings. She is also a member of the Board of Governors at Raffles Institution. Ting, the podium is yours.
Thank you, Shin, for the introduction. Can you guys see me? I requested for a step, but unfortunately it's not available. So those sitting in front just have to see just my head, okay? So thanks for having me here today. For the launch of World Bank's new Business Ready report. It's truly an honor to join the esteemed panel later. And also thanks, Norman, for the insightful presentation. Very interesting perspectives from PK and Prof. Loh as well earlier. As I read through this very interesting report, I found myself connecting to my own experience to the discussion today. Before transition to board role, obviously I spent over 30 years in finance, banking, payments, fintech across ASEAN. Along the way, I've seen firsthand how policies and market dynamics shape business growth, competition, and innovation. So let me share 5 observations that I believe are critical for Singapore and ASEAN to progress in the longer term. First, one area stands out in the report is credit accessibility. Singapore has a world-class financial system, yet in this report, to my surprise actually, it showed that Cambodia and Mexico outperform us in areas like secure transaction and credit accessibility. This raises a critical question. Are we truly business ready for all enterprises or just for those who meet the traditional lending criteria? How can we improve and build a more open financial ecosystem to help SMEs and perhaps even startups access capital? And how can we, or what can we learn from Mexico and Cambodia in these aspects? Labor welfare is another area I think you've seen in the report presented by Norman earlier. It's an area that Singapore is lagging behind our ASEAN neighbors. Singapore, despite its reputation for operational efficiency, scores very low in this aspect. The reports highlight shortcomings in key areas like minimum wage policies, unemployment benefits, and workplace protections. And with increasing pace of change and restructuring on the rise, even mid to senior professionals in their 40s and 50s are feeling the impact. While SkillsFuture is a great initiative, upskilling alone doesn't often or always translate to job placement. Perhaps we can explore a more robust transition programs to better support mid-career professionals making career shifts. For instance, could we refine corporate incentives to encourage companies to actively participate in facilitating these transitions? Then, of course, there's this question of how can we strengthen social protections without overburdening businesses, hence creating a win-win environment. It'll be interesting to see what insights this report offers and what lessons we can draw from other countries' approaches as well. Now, this brings me to a broader observation about foreign labor policies and talent dilemma. While the foreign labor policies aim to protect local workers, they also tighten the talent pipeline and increase wage pressures. Businesses are struggling to balance rising costs, talent shortages, and the need to stay competitive. Even in the boardrooms, we can't escape the reality of war, but this time, war for talent. With tightening talent pipeline in key industries, leaders are grappling with the challenge of securing the right people while navigating rising costs and shifting workforce expectations. Could we explore a more flexible approach, perhaps one that supports local hiring while allowing companies to bring in foreign talent when needed? For example, tying foreign talent access to commitment in skills development, technology transfer, and investment in training and development programs for local workforce. This could definitely help close talent gap while strengthening local capabilities. Next, as also mentioned by Norman, 40% of companies in Cambodia face monthly internet disruption compared to just 2% in the most efficient economies. This is a stark reminder for all of us that without a robust infrastructure, businesses struggle to operate, let alone innovate. I saw this firsthand when launching GrabPay across Southeast Asia. In Singapore, we take fast internet access for granted. We get impatient if a payment is not instant. But when rolling out GrabPay across Southeast Asia, and I recall in the Philippines, a few years ago, we quickly realized that outside the major cities, patchy Wi-Fi and limited mobile data access were major hurdles. This reinforces a crucial point. Innovation is not just about technology. It needs a solid foundation and infrastructure. As Singapore aims to stay ahead, continue investment in digital, infrastructure, finance, and human capital will be key to maintain our edge. Moving to my final observation, market competition and innovation. This report highlights gaps in Singapore's market competition framework, particularly in quality of regulations that promotes market competition and access to public contracts. This is an interesting finding. Perhaps Norman can share more insights later as to how we can improve. But in the meantime, let me share a relevant example from my own personal experience in payment sector. For years, we all know NETS, owned by Singapore's 3 local banks, operated as a closed-loop system. Initially, they introduced a QR payment system that was only accessible to their own customers among the 3 banks. It was only through regulators' intervention, such as MAS, push for a common QR system, now known as PayNow, that we achieved greater interoperability, scalability, and adoption. Today, PayNow allows customers from all participating banks and e-wallets to use the same platform. In contrast, during my visit to Sweden over a decade ago, I noticed that their banks had already collaborated among themselves to launch Swish, a unified payment app accessible to all, well ahead of us. This comparison highlights the critical role of fostering collaboration and competition to drive innovation and efficiency in our markets. If we want to see innovation, we need more competition, perhaps stronger collaboration between private companies and state-owned enterprises. A more open and competitive environment is key to spur innovation and growth. So in summary, Singapore has achieved significant success in many areas, but the world is evolving, and to maintain our leadership, we must rethink our approaches to financial inclusion, social mobility, labor policies, and competition. The critical question is, how do we strike the right balance? What are the optimal trade-offs between growth and social progress, between stability and competition, and between efficiency and innovation? Moreover, how can the private sector and SOEs collaborate more effectively to drive innovation and shared prosperities? As we navigate these challenges, we're also reminded by the Dean earlier in his opening remarks that we are a small nation state. Despite our success, we need to look beyond, especially to our ASEAN neighbors, for shared learnings and progress. After all, Jimmy, you just mentioned the best of globalization is behind us, so we have to look towards ASEAN. By fostering regional collaboration, we can collectively address common challenges, leverage complementary strengths, and accelerate growth across the region. After all, ASEAN is one of the fastest growing economic blocs in the world. So these are not just policy questions. They are fundamental to shaping Singapore's future and our role in a dynamic ASEAN. I look forward to hearing more perspectives from the panel as well as the collective wisdom in this forum. Thank you.
Thank you, Ting, for sharing your experiences and stories. Last but not least, we have Professor Lawrence Law, Director for the Center for Governance and Sustainability at National University of Singapore Business School. Professor Law earned a PhD in management from MIT, where his thesis on technology governance received a global first prize. He leads major sustainability and corporate governance initiatives across Asia-Pacific. Is a regular global commentator on investments and ESG strategies in many regions and has received the NUS Annual Teaching Excellence Award. Professor Law, please.
Thank you, Dr. Sin. When Paul invited me to serve as a panelist, I immediately say yes because I thought, I could just sit back, relax, chit-chat. But I didn't know I have to make a speech, so I was just frantically scribbling on a piece of paper what I'm going to say. Maybe I'm not business ready today, but so I only have 3 points. Very simply, sufficiency, surprises, and structures. So I think let me very, very quickly, since it's end of the day, look at sufficiency. I think in many assessments, and I have done quite a lot at my research center, we normally face this dilemma of precision. Sometimes, we have so much specificity in the way we appraise entities that sometimes we lose the bigger picture. Let me give you an example. Beside my executive and consulting work, I'm a professor, so I grade student work all the time. I'm sure Paul too, and those academic. In my younger lecturer days, I used to have a very detailed rubric. A lot of boxes, a lot of points to check. Whenever a script comes, I check against all the boxes. I give the A, I give the distinction. I fail them because they don't fulfill checking the boxes. So somewhere down the line, a few years later, I found that those that I checked the most boxes are actually not doing so well in the business world. The more boxes you have, the less business ready they are. So I think what is maybe more sufficient is we need a holistic assessment so that we don't face this problem of specificity, problem of exactness. Let me go on to my second point, which is surprises. And I think precisely because of these dilemmas, looking at the result from Dr. Norman, of course, there are some surprises. It's not that Singapore should top every category. In fact, I even doubted that some of the top scores that Singapore have is valid because in some of these indicators, there's actually no depth. It was just, getting the scores because you fulfill certain informational disclosure, therefore you get it. So if you look at surprises, without any value judgment, for example, if you look at, say, Cambodia, they score very, very well in financial services, top in ASEAN, way above the rest. But if you really go down to the structure of the financial system, and again, this is not a criticism, I must say, and of course, it's a very rapidly growing country, which I respect very, very much. If you look at, say, for example, something I'm familiar with, stock exchange, the Cambodia Securities Exchange perhaps only have 11 listed companies, only 11, but of course, it's emerging very fast, and probably what is driving the good score is the abundance of rural credit institutions. So you can see what you measure is what you get. You just design your whatever indicators, you will get exactly the same result. Just like Singapore prided itself today being last in labor. And if you look at the context of Singapore, it's obvious because it's a very small economy. We have to put a lot of restriction on the unfettered inflow of foreign talent and foreign workers. We have a very detailed, somewhat restrictive scheme for classifying, I would say, foreign workers in Singapore. Some of you may it's an EP, there's a S-Pass, there's a WP domestic. So it's, of course, it's very cumbersome. So all this will lead to the rule. So that leads on to my last point. First point is sufficiency, surprises. The last point is structures. Actually, in my view, being business ready is more than just indicator. In fact, it's the broader structure of the market, of the whole economy. For example, the macroeconomy. How robust is your monetary policy? How strong is your fiscal policy? How about your political stability? In fact, these macro factors will be more important for you to be business ready than specific indicators. And I should say, just in conclusion, to be business ready for the next few years at least, we not only need to be just business ready, we need to be Trump ready. Thank you. Thank you.
Thank you, Professor Low, for the very insightful comments. Now, may I invite all our panelists, including Dr. Norman, to the stage for a panel discussion, please. Okay, to begin with our discussion, I will first invite Dr. Norman to respond to the comments that our panelists have made about the Business Ready report. So first, I'll provide a brief summary based on my understanding of our panelists' comments. So Kuan has talked about trade barriers and how SPF can help Singapore as well as ASEAN economies to overcome those trade barriers, including launching a future web portal for the registrations and so on. And Jimmy discussed how ASEAN is a key beneficiary in the new era of globalization and how all the FDI, despite declining in all the other places in the world, is coming into ASEAN, and how UOB is helping ASEAN countries to become business ready and then to link all those clients with the ASEAN countries. And then Ting has raised many interesting stories. So Ting has talked about GrabPay, her experience about GrabPay in the Philippines, how the underperformance of utility services in Philippines has prevented GrabPay to be successfully launched in some of the lesser cities. And then Ting has also shared her experience about PayNow as well as Nets. So how only after 10 years, only after a while, that Singapore can launch an interoperable PayNow system across the financial banks and all the financial institutions, whereas in Sweden, they can collaborate together and come out with an interoperable PayNow system. And then Ting has also raised an interesting observation about foreign labor in Singapore and how major corporations in Singapore find labor management policies in Singapore a very stringent or rather constraint for the corporations to operate in here. Whereas Professor Law brought up a contrasting point in the sense that although labor policies are major obstacles for many firms in Singapore, but still we are a small country, so therefore we needed that labor policy in order to address many social issues here in Singapore. And then Professor Law also talked about how we must be well-rounded, we must be holistic, and we must be future-ready and be uncertainty-ready from the American political theater. Right. So, so in light of this insight, we will appreciate Dr. Norman's perspective on these comments. Dr. Norman, may I invite you back to the podium, or you may sit on the chair if you want, to address these comments, please. Thank you very much.
Thank you. The first thing that I will say is that I am immensely grateful for the comments that all the panel members have given us. They are food for thought that I will duly share with members of my team and also with other people at the World Bank so that we can enrich our perspectives and our measurements. So thank you. The way that I will address the comments is by dividing my remarks into three groups. First, I will tell you about uncertainty. Second, I will tell you about balance. And third, I will tell you about what goes beyond. So on uncertainty, as I think I told you before, I come from Latin America. I am from Peru, where actually we are used to uncertainty all the time. Singapore is a privileged nation. Here you're living with lots of stability. So maybe you are not used to uncertainty. But we have a saying in Spanish that goes like this: a río revuelto, ganancia de pescadores. That roughly means turbulent waters imply gains for fishermen. You may want to think more about that one, but it really means that with uncertainty, with risk, you actually have opportunities that evolve. And if you are ready, then you can take advantage of these opportunities. So I would ask you to think about uncertainty not only in negative terms. Of course it's negative, but not only in negative terms. And think of this as opportunities that may arise. So identify opportunities in the middle of uncertainty. And I can think of, for instance, of Vietnam or the case of Singapore. There is conflict between East and West, yet Vietnam and Singapore may actually win from these opportunities. Business Ready, this report is giving you some hints, if not a complete picture, at least some hints as to how you can be ready for opportunities for growth, number one, or just the ability to resist shocks through resilience. So hopefully you will see this kind of report in that light, that it will prepare you for both opportunities for growth and also to address risks to become more resilient. That's the first point. The second point, I heard your comments about finding the right balance. That is difficult. And in the report, we have also tried to find a balance between what's good for businesses themselves and what's good for the other participants in the economy that are also members of the private sector. For instance, workers, consumers, the environment. They are all important for the private sector to thrive in the long run. And achieving that balance has been quite a challenge for us. We are guided by this principle that you may remember from your study days from Aristotle, who preached on the importance of the golden mean. The golden mean means that the best situation is not in one extreme or the other, despite what we may have been listening from people around the world. You go to this extreme, you go to the other. It's most likely the case that the balance is somewhere in the middle. Let me give you the example that the way that we confront this for labor. We don't think that full flexibility of labor markets is perfect. We actually think that you need to combine this with protection for workers, for all workers, for unskilled workers, for skilled workers, and I would have to say particularly for the vulnerable. That's the second point. The third point is about looking ahead or beyond. So yes, it's true that, for instance, in terms of geography, now the world is no longer, unfortunately, globalized. So you cannot rely on a world where international trade and the order given by multilateralism will prevail. But maybe it's not only about ASEAN. Recently, I participated in some events, just for instance, for APEC, where actually I saw some people from Singapore, from Vietnam, from Malaysia, from Taiwan, from China, having dinners, conversations with people from Canada, from Colombia, from Peru, and actually I was very enthusiastic about those possibilities. And I think that even if we cannot achieve these globalized goals, we can at least look not only in the region, but beyond. And I am telling you that other regions will benefit enormously. And you might also benefit if you trade and exchange information with them. But it's also, the beyond is just the final point on what this report actually does. This report is based on the micro foundations for growth. It's not to be seen as a complete assessment of everything that is important for businesses. I recognize the point that we don't deal with macroeconomic issues, for instance, with fiscal sustainability, with monetary discipline. We don't deal with those. We don't deal with political stability. We don't deal with crime and safety. That is true. And that is done on purpose, because there are many other reports that actually address those issues. So it's also maybe a sign of humility. We present this report to you, and we ask you to take it for what it's worth, recognizing that there are many other elements that you take into account as you assess the business environment.
Thank you, Dr. Roman, for the discussion. I would like to ask Dr. Roman just one more question. This question is actually coming from an ASEAN country, posed by Professor Dao, the Vice President of Foreign Trade University in Vietnam, who is joining us online right now. So his question is as follows. The report identifies business entry and market competition as challenging areas for ASEAN countries, considering additional factors such as political stability, which we have talked about, and then trade agreements as well. Could you explain how these elements are crucial for attracting FDI? Furthermore, for countries that are doing well in these areas, for instance, Singapore, which scored 93 out of 100 in business entry, could you suggest any policies or practices that less successful countries might adopt based on these successful experiences?
Well, excellent questions. Well, first of all, why are they important? I think there are three topics that are particularly important for entrepreneurs. That is, those that are thinking about opening a business. And they are business entry, market competition, and business location. The others are important as well, but these three are particularly important because these are the very first steps. If you want to open a business, you always ask, well, will I be successful in this ecosystem? What if I am not just competitive? Or what if this is dominated by a couple of state-owned enterprises? Then there will be very little that I can really do. So that's on market competition. But also, if there are so many barriers on coming into this market, or it's very hard to find the right place for my business, then very likely I will choose a different location. So why is business entry, market competition, and business location so important? Because they drive entrepreneurship. And we do want to have entrepreneurship being a lot stronger. How can this be improved? In the case of business entry, I think the most important thing is by facilitating the regulatory framework, providing online services for registration, and making them all unified into a single portal. So when I talk about digitalization, I am not just saying that every single requirement should be done digital. I am saying unify all the requirements, make them simple, streamline them, and then digitalize them. Otherwise, you are going to just replicate on a digital matter what you had on paper. And that's really maybe even the worst of all worlds, because many people don't have access to internet. For them, it might be better just to do it on paper. So streamline first, and then create a single platform, digitalize. That's a way to deal with business entry. Market competition is a different matter. Market competition, I think the most important most important factor has to do with not regulating prices and with creating a level playing field, but not having large businesses dominating structure. So whenever we see that there is one business that comes in and takes out all the rest and dominates the market, then that is worrisome. We have seen it in ASEAN before, when, for instance, we had several competing businesses for transportation. Grab came and dominated the whole business all of a sudden. And I was always wondering, how did this happen? Because we had a competition before with Uber, and prices were lower. The systems were actually very efficient. But something happened. All of a sudden, then we had only one company. Maybe now there are more. But when I was in Malaysia, that was a big shock for me. And I always wondered, how could this have happened? If you are thinking about market competition, then you really need to think about maybe the undue influence of certain businesses. Right.
Thank you,
Hope
Dr.
I
Norman.
didn't overextend myself.
Thank you, Dr. Norman, for sharing your stories. I would like to open the question to the panelists as well. So let me just repeat the question for a while. So the report identifies business entry and market competitions as challenging area for ASEAN competitions. Could you elaborate from your stories, from your experiences, how they are critical for attracting FDI to ASEAN, like Jimmy has talked about? And in particular, how can the less successful countries learn from the more successful countries, such as Singapore, who has scored 93 out of 100 for business entry, and adopt the experiences and the lessons? Thank you very much. Jimmy, do you want to start?
Okay, let me share with you some thoughts. You know, when, like for example, in Singapore, market entry, everything we score so high, actually it means it's very easy to come in to do business, but it also means it's going to be very difficult. Because what you do, everybody else can do. And yet at the same time, you have to meet with the challenges of Singapore, which most of the time we see corporates coming here, and then eventually they move their manufacturing out. We are just too expensive as a nation, right? Costs are high, etc. So the key thing when we saw companies across the region, or even including ourselves, is to identify areas whereby into that country, no one else can do that, right? And in fact, the approach as we go into across the region, let me share with you as a Singapore bank. We are always known as a red dot in the region, right? And the countries around us are so big. We go in with a sense of humility. We go in with a sense of not, oh, I'm not coming here to teach you, but we are coming here to collaborate, to create value, whereby not just to impact the system economically, but to impact the system socially. What value are you bringing to that system, to the population, to that community? And that's why it becomes a lot more attractive. If, as much as there's a willingness to go in, the other side must be willingness to receive you. Why would we prioritize your company, your business, etc.? So the key is not just economic value, but also social value. And the differentiator that you go in. To be honest, when I was in Thailand talking to the local companies, and there's nothing UOB in Thailand can do that other banks can't. Right? So why do they need to work with us? The local banks can do a better job there. It's only when I started to talk about how we can help companies in Thailand to go cross-border. And if you realize in a country whereby there's more than 60 million population, actually most of the Thai banks are actually fairly domestic-based because they don't go out of the country. But Singapore banks have no choice because we can only succeed if we go beyond the Singapore borders. And our value only comes in when I'm able to help the Thai companies to go beyond Thailand. That's when I have a conversation. If not, I will be competing everything that what the Thai banks have. The other thing that we do, when we go into the region, we bring not just economic, we bring social value. whereby that's why when we go in through a FDI, I even talk about how many jobs am I creating by bringing X billion of dollars into the local system. Why? Because the government agency that I work with, they really don't care how much money you will be mixed. They care about two things. They care about economic growth. They care about the job creation, the livelihoods that you create. That is in line with them. So when we recently, 2 years back, when I went to Indonesia, UOB has been doing this painting of the year for last 42 years, right? And when I met one of our artists that he won the award 15 years ago, he came to me and he said, "Thank you for sustaining this." And because of what he won 15 years ago, today in Jakarta, he owns an art school. And he said, if I have not won then, I will not be doing what am I doing. So we realize that we bring a different value to the system, and the whole system will embrace us very differently because they see the economic and social value that we bring in. So it's understanding all this that we're able to bring value across the entire region. And we keep asking ourselves, what are we bringing in different from everyone else? Otherwise, you will be only competing with one thing. You'll be competing on price. We don't want to compete on price. We want to find an area that you are so uniquely different that you bring price out of your equation. Then you are unique. Thank you.
Thank you, Jimmy. Ping Kuan.
Yeah, just talking about today's, the global trade disruptions and all. I think the role of FTA and the strength of the FTAs should come into place as well. If you look at it, Singapore actually has got probably the highest number of FTAs, within the region, within the ASEAN region. And thanks to the ASEAN region, we are able to also establish a lot of ASEAN plus one, kind of agreements within the RCEP kind of trade agreements in the multilateral platforms. So I think that for FDIs to consider coming into Singapore, the element of FTA attractiveness and the power of that within the economies should be also considered. Yeah, and people should look at when you're considering reshoring and sourcing of supply chain. This will be a very important, critical area to look at, and seriously consider the fact that ASEAN as an economy, as a cluster, as a region as well, that the FTAs are really good.
Thank you, Ping Kuan. Ting?
Hello, what was the question again? Sorry, I think it was...
So the question was business
entry and
market competition.
Okay. I think let me share an example about business entry. My son, who is 27, just finished his degree, master's in UK, and he and his co-founder, a British citizen, decided to set up a company here. Well, because it was easy to just incorporate the company. Obviously, it was very efficient, it's transparent. But I think beyond that is also that this language, no barrier, low tax environment. So I think it takes the whole business and ecosystem, the environment to attract FDI, not just about business entry and all that. And I would say it's also the access to capital as well. That's also one consideration that entrepreneurs are thinking about starting out in Singapore. So obviously for Singapore being such a small nation, attracting FDIs is definitely very important, because not only you'll be able to attract more jobs, I would say more opportunities for the citizens here and the PRs here staying here in Singapore. You'll also be able to then create more prosperity. So I think that definitely is very important, and also support your foreign currency, the foreign exchange. I think that it is another consideration as well. So for me, I would say that we should not look at a few factors in isolation, but should look at the holistic business environment.
Thank you.
Okay, quick one.
Yeah, sure.
Okay, maybe I want to challenge this association between ease of business entry and foreign direct investment. In fact, sometimes it may be the reverse. I think in perspective, the pot of gold inside the house is more important than the door. Maybe give some example. Let's look at China in the early days before opening up. You know, you look at early pioneers of foreign investment like Coca-Cola and KFC. KFC actually opened in China in the 1980s. In the early 1990s, I actually visited while they're opening up. I actually ate Kentucky Fried Chicken at the Great Wall. I mean, it was a very big outlet in the Great Wall. So sometimes it is not about just loosening your door, opening your door. The pot of gold inside is more important. If it is very attractive market, investor will beat a way into your door regardless of any entry barriers. Yeah.
Thank you, Professor Loh. In the interest of time, I would now like to open the floor to questions from our audience, both in person and online. Please feel free to ask any questions you may have for our panelists. You can approach the microphone on the side to ask your questions or type them into the chat box.
Thank you. I really appreciate this session because it's so comprehensive and it covered such vast areas, and so much so that it takes time to digest, to chew on it and to digest. So I just pick on one point, the last point which you raised, Lawrence Wong. Lawrence. And that is about to be business ready, are you also Trump ready? I know this is a very serious topic. It's not a joke, so I won't use Trump as an example. But instead, I want to use that to ask you this question. When you talk about business ready, how much does political ready a consideration? Especially when you talk in the context of ASEAN. There's so many differences in terms of political system, political approaches, and also the social-political consideration, meaning it's not just about business, as you all have discussed, the principles of business, the sustainability, the challenges, but the non-business aspect of being business-ready, and politics is one, including, I mentioned about social considerations like, I hope I'm not political. I don't want to be politically incorrect here, but including corruption, including managing different levels of business readiness in terms of their management standards, and also in terms of whether you can really be political ready to be business ready. Thank you.
Thank you very much for the question. Professor Loh, do you want to start? And then we will invite other panelists.
Okay, maybe I always expect the most erudite question from you. Anyway, I think you are right. In fact, I want to even change a paradigm today based on the learned opinion. Instead of looking at being business ready, I think we should be talking about being business resilient, particularly in the next era where so much uncertainty, not only because of Trump, because of MAGAism. I mean, let me take out all the ism. You know, it's going to be a very entrenched philosophy, not only within these 4 years, but beyond, because it's very deeply entrenched, especially into the Republican machinery. And right now, even the vice president is going to be the torchbearer into the future. So we will expect this to happen for some time. And we just have to get used to it. So instead of being business ready, which is good, it is a necessary condition, but a sufficient condition is we need to be business resilient, being robust to changing scenarios, to vagaries, to political leaders of the largest economy, making changes when he wake up from the wrong side of the bed. You know, you have to just get used to all these vagaries of changes. Yeah.
Thank you, Professor Loh.
Yeah, I would like to add on what Prof. Loh talked about. These days, we talked about leadership in a chaotic and uncertain world. It's all about resiliency. So I speak from the board's perspective, right? So even at the board, we talked about how do we ensure the board has a resilient culture, promote more transparency and more diverse perspectives to ensure that we are not blindsided by areas that we are not familiar with. And I think it is all about continuous to stay curious and learn as well, and be more flexible and ready to change course if you have enough information. The worst thing is about being blindsided is when you are presented with different facts. You're not able to pivot fast enough. You're not able to change your perspective fast enough, and you're not able to respond to a new situation fast enough. I think those are the questions that we need to ask ourselves at the board and management level.
I'll just share with you. Today at the board level, like what Norman mentioned, actually uncertainty, every era, every season, there will be new uncertainty. It will never be perfect. So increasingly at board level, there's a lot of what we call scenario planning, stress tests. We term them as known unknown. That means those scenarios that is likely to happen, but extreme situation. We also term them as unknown and unknown. Unknown unknown means you do not know what will hit you, but under what circumstances it will break the bank for us. Right, so the unknown unknown, COVID wasn't unknown unknown. It was never part of the radar screen. In fact, today in the boardroom, we say once it's known unknown, organization can cope with it because there will be stress tests, there will be work done to look at that in the event when it hits. The question is the unknown unknown that we have to live with in an increasingly dynamic, uncertain world. And there's this whole new philosophy of what we call strategic ambiguity, that we just have to learn to cope with it. And increasingly because of that, that's why from a very tight system today, there's a lot of contingency plan. In the event this happened, well, so the question is that if anything that happens, it will not be big enough that it will sink the mothership. Otherwise, we will be able to cope with it. So as a result, you'll find that a lot of the businesses, the cost will increase because there's a lot of plan B, plan C, plan D that needs to go along the way in that. And that will be the new mode of doing business. At the board level, when you're answerable to your shareholders, for example, in today's condition, you cannot be seen not having an alternative manufacturing or supply chain. You just can't. How much you're going to do, we'll decide later. But to answer to the board and shareholders, you cannot don't have. So that's why increasingly there's all this that's happening in the region because of all whatever that we are seeing. You cannot don't have a plan B.
That kind of reminds me of, we call that BCP in companies. So maybe we should consider it as a BRP now, business resilience plan that you should have looking forward. Because a lot of time, businesses looking at BCPs, they are looking at the different structures of that, but not taking into consideration the overall global trade scenario. So maybe what companies should start looking in is really in this area.
In 2014, actually, I directed the World Development Report on risk. So this was after a series of catastrophic failures in the world economy. And what we decided to do was actually approach the issue of risk management from not only a pessimistic perspective, but also from a positive perspective. So that's why we named the report Risk and Opportunity. Because with uncertainty comes also opportunities that can be taken into account. So I agree with the panelists here, I agree with the panelists that the resilience is a very important component. But let's not go to the extreme of being defensive. we need to also think about the positive opportunities that come with this uncertainty. And being business ready actually implies that you are ready for shocks when they hit you, but also open to opportunities when they present themselves.
I have a real-life example. So during COVID hit, Grab ride-hailing transaction fell by 90%. So almost went out, right? But they were able to pivot and respond to the crisis, and within 3 months, roll out Grab Food across Southeast Asia. None of us had a good night's sleep, of course. 3 months we worked nonstop, but so that there was a culture of resilience. There's this fighting spirit, I think, and there's innovation because under extreme circumstances and crisis mode, innovation often, new ideas often come up. So I think the rollout Grab Pay in 3 months across Southeast Asia, that was really unheard of for a lot of countries, a lot of companies.
Thank you very much for all the panelists. Are there any final questions from the audience? Perhaps just one quick question.
Hello, I'm with the Asian Development Bank. I'm with the Trade and Supply Chain Finance. So with the thesis of solving the $2.5 trillion trade finance gap between the global south and the north. So how would you, ASEAN is a bit north of hemisphere, right? But what's your opinion about using your metrics, your scores to improve the global south in terms of equal play? Thanks.
Dr. Norman, yeah.
This is actually another case where an opportunity opens. You know, because we have been relying from the developing country perspective so much on what the big countries, the powerful countries do. Maybe now we need to turn to other countries in the global south and start thinking about how to take advantage of the opportunities of trading with each other, of learning from each other. Having been in Malaysia, for instance, for 5 years, I see that Malaysia could learn so much from South America. And actually also South Americans basically ignore this part of the world to their peril because there is so much knowledge and understanding and goodwill and initiative and ingenuity here that we can benefit. So I would say if the global north is more protective now, maybe less open, we cannot change that. But we can change the attitude that we have towards the global south. And I hope those opportunities realize themselves.
Okay, thank you, Dr. Lohmann. I would like to conclude our session by thanking Dr. Lohmann and our panelists for sharing their extensive knowledge and experiences. Thank you. I would now like to invite Prof. Chun back to the stage to provide some concluding remarks. Prof. Chun.
Thank you. We are 10 minutes over time. Thank you for staying back. And I want to thank the panelists and Norman for the very interesting session. We covered a lot of topics, and then and I think it was an extremely enriching and stimulating session. So ACI, today is Norman's show launching the World Bank report. ACI, we are going to do our own report, and it will be released in due course. We don't want to release today, but because it's a World Bank show. And, but thank you for coming, and then we look forward to having you again and another event. Thank you so much. There's a bit of investment outside.